Okay, on this video we'll talk all about how much home I can afford, how much home you can afford. It's definitely the number one question I get asked whether I'm talking to my new clients, how much can I afford? And we'll talk all about the relationship of the debt to income ratio, how to calculate that, because that's going to answer the question, how do I calculate my DTI ratio? It's going to determine how much home you can afford. For those who don't know me, I'm Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage here in Port Saint Lucie, Florida, and I'm helping families just like yours for over 15 years and buy homes, and I can definitely want to help your family as well. If you would, just go ahead and leave a like on this video. It definitely doesn't cost you anything and definitely would help other people just like you find content just like this. The general concept, your debt to income is basically the debt to your income. It's a ratio of how much you owe versus how much you make. And effectively, that includes the new mortgage payments you hope to get into, as well as the debts that you have. So that being said, I'm going to go to a detailed explanation with a handy dandy little spreadsheet here, and let's go ahead and take a look. Okay, here is my little Excel spreadsheet. I pretty much use Excel for basically everything, and this helps to how much home you can afford, just to see what it is per $1,000. Now, you have a whole bunch of calculators out there that are just as hard to fill out as they are meaningful. And my goal is to give you a little bit of value to figure out, roughly how much home you can afford. So if you want to copy this spreadsheet, definitely all my information's in the show notes. Shoot me an email. I'll get this to you. I think it's pretty easy. The things in yellow are the things that you enter. Like this is down payment amount, so you can kind of put in 10%. It does it for all of the purchase price ranges. And the columns here are purchase price. PP is purchase price. So 100,000, 150, 200. Every $50,000 to 700,000. You can extrapolate it out, but that's a pretty good range for most clients in the United States. Unless you're above 700,000, you just kind of extrapolate it out. Okay, so well, it goes really to the new conforming loan limit, which is 726,200. So that's kind of why I cut off at 700,000. So, and you go to interest rates right now for end of January 2023, we're in the mid-low sixes roughly. So I just use 6.5 as a nice round figure about what that might be. And again, this is a very rough estimate to kind of get you a ballpark range. PMI is private mortgage insurance. That's for a conventional loan. Obviously, for an FHA loan, it's fixed usually at 0.85. This is generally for a conventional loan. For most loans out there, it gets, like I said, this is just a rough estimate. So if we do, say 5% down, roughly, or heck, we even do even 3.5% down FHA, and then you just change this to 0.0085. That changes the math. Now, this is a 30-year fixed loan, and as well as insurance and taxes. Your mortgage payment is your principal, interest, taxes, insurance, and PMI and HOA. So these figures are going to swing what this number is. Now, what's this number at the bottom here? Basically, this is your principal interest. This is dollars per thousand, and that's kind of the general measure that we're going to look at. How much dollars per thousand can I look at? So if I make a certain amount of money per month, what is the purchase price range I can afford? So that's the number one question I get asked, like how much can I afford? So this is going to answer that question basically off your mortgage payment itself, and then as far as your total payment. Okay, what is my affordability? And you can see at the lower purchase price ranges, obviously you want this number to be lower. So you can generally, your payment for that one, because of the tax and insurance are there, and they're the same across the board. Obviously, the higher purchase price ranges, they get absorbed more into the payment. And over the purchase price ranges, you can see a pattern. Roughly $6 from 100,000 to 700,000. It's kind of eerie when you think about it. So at the very bottom, I did average and median, and it basically from 6 to 9. Roughly that's kind of what we're at. So the way I did it before, it was 5% and 0.04. I did it from 6 to 8. So usually for a 5% down model, that's kind of in the ballpark from $6 per thousand, and then about $8 tops. So that's kind of what it'll be. All right, so I go into this other spreadsheet here. Now this is for a live client. So basically this is you entering your yearly gross income, monthly payments, so let's kind of reset these. So let's go for a single borrower. Okay, so say you make $50,000 a year. That's roughly the median income in the United States. All right, so basically that's $41.67 a month. All right, so let's just say you have a car payment of $300, your credit cards are like $50, and maybe you have a student loan about $150. Okay, so The next is you got to choose what your risk tolerance is. So roughly, they come to me and I say, like, here's what the maximum you can afford. That's assuming maximum affordability. Now, on an FHA loan, usually the maximum back-end debt-to-income ratio is like 56%. Sometimes on a VA loan, you can go as high as 60. Again, that's an extreme level of payment risk based on the way that we model risk for mortgages, which is effectively the amount of your income is being used to consume and pay your debt. So you can choose, let's say 50%. That's a nice run. Or you can do 43. Obviously, the lower that number is, the less you can afford, obviously. So let's just do, what is the maximum for 50? Usually I do 50% is kind of like a good maximum. Getting above 50 is not always guaranteed. You have to have other compensating factors like some assets or things of that nature, FICO scores. So basically, if I use a 50% model, household debt of 500, your max mortgage payment $1,583. So it's just a simple calculation. So using the $6 per thousand, $8 per thousand, the purchase price range roughly $200 to $260, depending on taxes and insurance. So every property, I know here in Florida and basically anywhere else is going to have different taxes and insurance. But here in Florida, you can have identical homes side by side, and the tax bill is going to be different depending on homestead. So that's why you want to get a detailed analysis as you go forward. This calculator is meant to be the very start of your home buying journey to see what it is that you can afford. Okay, so I do that. So basically, that's where it is from 6 to 8. Okay, so let's just reset this and go for let's just say you make double that. So let's say you're single, you're doing well, you make $100,000. All right, so you get a nice car. So you get a bigger car. So maybe your credit cards are maybe $100, and your student loan, you got a $350 student loan. Okay, so again, so your back end, is 50%. So your max mortgage payment is $3,200. So whoops, didn't mean to do that. Sorry about that. That was a different timer that went off. Anyhow, so your maximum payment will be $3,200. That's the maximum mortgage payment you can afford. And what that translates at $6 per thousand is like $544. At $8, about $400. So I would say $400,000 is roughly how much home you can afford on $100,000 salary with different debts. And like I said, you can play with this as best you can. And other debts too. Student loan installment. Like say you own other properties. That's all going to factor into it. Say you have $100,000 and then you have another $1,500 mortgage payment. Obviously, that's going to really reduce your affordability, right? So that's what you have to keep with a grain of salt. So let's just say two high, let's say a married couple. Each let's say they each make $80,000 a year. So. And then you have each other's cars. So the other one maybe cheaper car, their credit cards, student loans. So that's kind of determine what you can afford. $80,000 a year, total monthly income, household debt. So make sure it's calculated correctly. Yep. Yeah, so basically at a 50% range, you can afford quite a bit. So obviously at $6, about $900,000 and $700,000 at $8. So really, you use this based on your own situation, how much debt you have, what your other installment payment debt might be, and it's really a story of what you can afford now, and also your risk. So on this one, $4,350. So if you lower this to say 43, I don't want to go above that. I want to be very conservative at 28%. So you bought for $350. So this spreadsheet will help you have the ability to take this. And really, know how much home you can afford. It's a nice handy dandy little tool. Definitely, if you want it. And YouTube wants you to watch this video right over here.